What's up, guys? It's June 16th, 2025. So we had a big gap up, a tradable leg within the first hour, and a sideways price action for the rest of the day. That's the expectation. We have a really big gap up, it's a tradable leg, and a sideways price action for the rest of the day. So we got that. I didn't place any trades today. I took a hit last night on the overnight session, so I took it easy today, but I'm doing all right on today's overnight session. So just a quick announcement for the memberships. I changed the videos I'm going to be dropping. I'm going to be dropping more trade breakdowns and how I find trades, my entries, and how I maneuver around taking losses and things like that. Just a quick example. I did drop a video on this earlier. It's a free video, so go check it out if you want to know about trap traders. But the main setup I've been hitting up is a 50% pullback. So I'll see a good breakout here, maybe there. Could just say there's an opposite bar. So opposite bar, opposite bar. I know bulls are trapped here. I also know bulls are trapped here because there's a gap. So there's trap bulls, limit order bulls are trapped. Market selling off, multiple gaps. And then we have a bull bar. So bulls bought down here, bulls bought down here. For these bulls to get out at break even and avoid a loss, they're going to exit at the 50% mark because their entry is, this is how I showed it in the video. So bulls buy here, bulls buy down here. Now these bulls, for them to get out at break even, they're going to sell right here at the 50% mark. So that's the first touch. So they get out there. Traders, that's one set of traders. There's trap traders. The second set of traders are traders who front run the breakout. So maybe bears who got short here or here, they see the breakout taking place and now they want to add to their position. So they're looking for a pullback. So now these bears are going to also, what the heck? These bears are also going to short the 50% level. And then the third type of traders is us, second leg traders. We're looking for a second leg, and now we understand the dynamic between front running traders and trap traders. We're also going to short the 50% level. So three types of traders shorting one level. That's the trade I look for. There's a couple other entry techniques I have. I'll be going over them in the membership videos for the live breakdowns. I've already posted a couple, and I'll be posting some more later this week. My target, stop loss here, entry there, target 1-to-1. This setup worked multiple times already. I didn't take all these tonight, but take a look. Something to think about. Think about it over the weekend. Like, is my setup focused around trap traders? Because if there's not three types of people doing the same thing, then the market's 50-50. There's a reason to buy every bar, there's a reason to sell every bar. That's 50-50. But in this scenario, it's not 50-50. It's one-sided to the bears because we have trap bulls, we have front running traders, and then we have second leg traders. So there's three types of traders looking all at the same level. Their agendas are different. Trap bulls want to get out at break even. Front running bears want to add to their position so they sell more. And then us, we're looking to catch a quick move down in one direction. So a higher probable trade. So we all have different agendas, but for us to stay on track, we all have to sell around that 50% level. That's why I think it's really important for other people to understand the dynamic between leg twos. That's when the market's not necessarily 50-50. And just so you can see it again, look, bulls buy here, bulls buy lower. This 50% level is tagged right here, and then the 1-to-1 was met. Now we've had two legs in that direction. Generally, it's trading range behavior. I didn't take this trade, but I was measuring it out. So same thing. Bulls are trapped here, bulls buy here. Sometimes I put my order one tick below the 50%, so maybe I would have got filled, maybe it would have missed. You could argue, well, if I put it here, it would get filled because it's inside bar, so they get retested. But to stay consistent, I do usually, for micro channels, I look at the first opposite bar and the second opposite bar. So here to here. So just something to think about. That's what I'm doing. That's how I'm trading. And if you guys want to learn more, check out the membership. That's how all my trader premises are on trap traders and second legs. So let's get into this breakdown. Weekly chart, daily chart. Today is Monday, so this is the first bar, and it looks pretty bullish. We had a really big gap up. Problem with today is there's a tail now. We'll still have 4 days to rally, make a new high. Bears want this to be the start of a reversal. Bad follow through at highs for the bulls. Here's the daily chart. Just want to point out that the EMA is also the same. So this is the daily EMA. This is the daily EMA plotted on the weekly chart. And now we have multiple legs higher. We have many legs higher. So we have breakout leg 1, pullback leg 2, pullback leg 3. This breakout here, because trading range behavior, there's a bear macro channel, big down, big up, breaks out leg 1, pullback 2, pullback leg 3, trading range behavior, macro channel against the macro channel, and we've been in a broad bull channel right around here. This is today's bar. This is yesterday's bar. Yesterday's bar sold off. We bounced off the EMA, testing range highs again, and now the bulls are getting bad follow through. So, giving into the idea of more trading range than expansion. Leg 1, pullback, leg 2, pullback, leg 3, and look what happened in leg 3. We've been going sideways. So, interesting times, you know. Leg 3s is trading range behavior. Trading range behavior is breakout mode. So we're just waiting for that breakout. And then the dynamic will reset, right? If the bears get the breakout, bulls are now trapped. So let's say bears get the breakout. Then there's going to be trapped bulls here. And let's pretend there's a bull bar here. This is a bull bar. And now we're going to measure from the high of this bull bar to the low of this bull bar. Bulls buy here. They buy more here. Their break evens here. So they're going to wait for the rally, sell leg 2. Second idea is bulls get the breakout from here to, let's go. So bulls get the breakout. Bears are stuck down here, right? They short here. Then there's another bear bar that prints. So now we have a bull micro channel. Let me know if this makes sense. You gotta use some imagination here. What I'm talking about is if there is many bull bars. So bear channel, then we have bull bar, bull bar, bull bar, bear bar. So we measure the low here, we measure the low here. Bears want to get out at 50% to avoid a loss. So they buy back shorts, and then that creates a second leg for the bulls. There's a little more nuance to that in different types of setups. But yeah, that's kind of what I'm going over. That's how I'm trading. That's what's going down in the member section now. And I can post way more frequently than I was because I was really trying to make nice PowerPoints, but now I already filmed my trade, so I can break it down for you guys in depth. Anyways, let's get to this. Big gap up, bar 1, huge gap up, bar 1, bull bar, bad follow through, bar 2, bad follow through, bar 3. I say bad follow through because they're painted bearish, but check this out. It's still a triangle, which is breakout mode. Although this is bad follow through, a big bar like this sometimes can result in profit taking right away. So it's bad follow through because it's painted bearish, but this could just be profit taken. Bears could be getting trapped, and then we get the breakout 4, 5, 6. 3 bar bull micro channel shot off to get a second leg. We are climactic, so expectations. This is becoming climactic, so the expectations for this gap up, the tradable leg within the first hour, and sideways price action. So I'm gonna draw a gap here again. I gotta work. I started work on the gap indicator, and I got sidetracked into making a micro channel indicator, so I can like have it ding ding ding. So there's some cool stuff. I gotta stay focused on gap indicator, micro channel indicator, and I'm still trying to automate the system that taking a backseat on the system automation right now because it's giving me a real headache. So some separation from that project will be okay. We have 2 bull gaps, so we know bears are trapped. Gaps happen at resistance. Look at bar 3. There's a gap there, so bears are trying to sell. And I'm sure if we look far enough left, we'll find resistance. Well, there's resistance right here on bar 5 because there's a tail. So bears are trying to short the high of 5, breakout. Excuse me. There's a tail on bar 4, so bears get stuck on bar 5, follow through bar 6, no gap. Bears that shorted here and here try and short higher on bar 8. What happens instead is it never comes back to their 50%. So let's just draw it. So below 3, maybe the high of 8, never comes back to the 50% level. So what this means is this rally was so strong, bears had to get out for a loss. Short here, here, and here. So they buy back shorts for a loss. Regardless if they get out break even, that's good for the bears. They avoid a loss. But what's better is them to take a loss because now there's a sense of urgency for them to buy back quickly so they can avoid a loss. Because we don't close positions in the stock market. So if you're long, to end the bull position, you need to sell it. So you're adding to the selling pressure. If you're short, to close your position, to end your position, you need to buy back shorts. So we're never really closing positions. We're always buying or selling. It's just the brokers put the word close because you are closing a position. But by you closing a position, you're doing the opposite. So to close a short, you have to buy back shorts. To close a long, you have to sell out of longs. So that's what I mean. Bears are forced to buy back shorts at a loss, and it causes another leg up, leg one, leg two. In this situation, we had 3 legs. What is that? 3 legs. Leg one, pull back, leg two, pull back, leg three. Third leg, training range behavior, and now we see bar 13 is the high of the day for the rest of the day. Lots of overlap in this third leg. We can even see 3 fractal legs here. Leg one, pull back, leg two, pull back, leg three. Wedge top, wedge top. Now we have training range behavior. Reversals are a form of a breakout. I don't talk about them too often, but I'm going to start bringing it up more so as you guys, because you guys are becoming more consistent viewers, so I can start to build upon what I'm talking about, which has always been my goal, was to keep adding layers and layers and layers over the years. A reversal is a breakout, so although it's a different form, because breakouts trap traders, reversals trap traders too. It's just a different type of breakout. So bad follow through 13. 15 gives 15 the bulls that bought the high of 13. 15 gives them a chance to make a little bit of money. So the bulls buy high here, they're trapped. They buy 14, they can get out for a 1 tick profit. Their break even is right here. And look what happens. Sells off and scalps. Wow, just talking out loud, that's a setup I could take. I'm not going to take that because I haven't back tested it. So I do like to back test setups before I take them. Then we have a bear channel down. 18 is a bull bar, so it could be a pullback for 16, 17, pullback, second leg, or third leg down actually. Leg one, pullback, leg two, pullback, leg three. Then we get a 3-bar bull rally. Problem with this rally, it's just testing the breakout point right around here. Giving bulls a second chance to get stuck here to buy more lower and get out. So I think this is really good practice for people. You know, if you want to say this is one bear channel down, whoa, glitched out. If you want to say this is one bear channel down like this, 50% level was still respected. I wouldn't necessarily call this a bear channel, but maybe I would take that short. The reason I wouldn't call it bear channel is because trend lines are being broken. So there's a trend line. Wait, what? Hold on. So there's a trend line here being broken, right? Because 16 breaks this trend line. Then 19 breaks this trend line. And 22 breaks this trend line. So it's 3 legs down. But you could argue there's a broader trend line right around here that breaks and sells off for that 50% pullback scalp. I'm really going to be gearing these breakdowns towards trap traders because that's how we can start to understand context a lot better, a lot more detailed. Bar 24 is a bull bar, bar 24 is a bear bar closing on its low. So that tells me that there's 3 bear bars in this. So if I wanted to scalp this, let's just do this real quick. Bear bar closing on its low. We go to the smaller time frame. There's your 3 bear bars, 1, 2, 3. We don't need to go to the smaller time frame to see that because we know any bar closing on extreme is at least 2 to 3 bars on a smaller time frame. Why am I bringing this up? Because this can be scalped for 50%. And I do take 1 bar scalps if the context is good. I like 1 bar scalps. Look, and actually this was a fast exit. We get filled on 27 and we're exiting because it's a rally and a sell-off. So in 1 bar, you'd scalp 4 or 5 points maybe. 4 points, not bad at all for a 5 minute scalp, 5-minute trade. So that's why I think it's important to understand that dynamic. That dynamic exists everywhere. And then it sells off. The pullbacks are deep. We just had a rally with a gap up. 28. We have another gap, but now we have 3 bear bars in a row. Three, 4, 5. 32. First bull bar bouncing off the EMA. If you bought this looking for a trend resumption of the high, usually the first touch of the EMA, usually that setup is around bar 52, around 2 p.m. So if you bought this looking for a retest, not the right context. This context is screaming trading range behavior, climactic price action. We are in a trading range on the higher time frames. So keep that in mind. 35, 36, 37, 3 bear bars in a row, shunting a second leg down. I don't know if I would take this trade because 37 is an inside bar, but again, just to put some emphasis on trap traders. Bulls that get bulls that buy the high of 34 are trapped. They're going to buy low 30s. They're going to buy around here, buy around support here. They don't really get out at break even. Never touches their break even entry. Sells out. 38 is that second leg. 38, 39 is that second leg. And we have a lot of overlap. 40, 41, 42. Hard to trade. I think it's best to just wait for a bit bigger move. I saw this taking place, and I do think I might take the loss here. 45, 46, 46, 47, 48, 49. 4 bull bars in a row after a gap up. I think I would take that, and I would measure right around here, maybe right around here, depending on how I'm measuring, and it would be a loss. So the context, even though this dynamic exists everywhere, context still has to be the same, and the context for this is we're in trading range. Better to buy low. And I would get stopped out on 54. So I get filled around 52 and stopped out on 54. 5-6 point loss. Then we go sideways for several legs again. Leg 1, strong to its own second leg. Leg 1, pull back. Leg 2, pull back. Leg 3. After we get stopped out, let's see if this sets us up for another trade. And it does. Ooh, I don't know. You could get filled on, you could try and measure from that bull bar, which I might try. Sometimes I have 2 fibs up, but you would get filled from 51 to the low 54. And again, there's your, so that you'd make back almost what you lost on this rally up anyways. We have another bear channel. It's becoming climactic after several bear legs lower. Leg lower, leg lower, leg lower, leg lower, leg lower. And look, this bear channel, I think we would get stopped out. Channel starts at the high of 67, goes to the low of 69. Oh, we actually wouldn't get stopped out, but it's, I don't know. It depends how you play it. So here's the channel, filled on 72. It depends how 71 is formed. Let's see. Oh, I thought my mic was muted. I was like, no way. Yeah, so you wouldn't, because look, you get filled first and then it comes, so it never actually retests. The retest is before the fill. So that might be a loss, but you do have time to scalp out. And then bar 72 anyway, so you probably shouldn't be trading past that. Then ends in a rally. Then we took a peek at the overnight session. Selling off. I think the overnight session already closed the rally this morning. The rally's here. The gap, where is the gap up from? 81. That is such a big gap up. Oh yeah, bears got a ways to go. So it'll be cool to see what happens. Hope you guys are doing good. Hope you guys understand where I'm coming from with the context, the trades, and the breakdowns. If you don't, please don't hesitate to ask. I'll always talk to you guys in Discord or in the comment section. Thank you for your time. If you learned something, share a show. Don't be a hoe. And I'll talk to you guys tomorrow. It's Monday. So tomorrow's Tuesday now. So yeah, you guys have a good one. Let's have a good week. Let's finish strong. Talk to you guys later. Thank you for your time. Bye.